You are about to find out the key levels for Target, ticker TGT. Now, again, they do have their earnings coming out pre-market tomorrow, so that's what we're preparing for. Quick note of what's happened in the previous two earnings: sell off. The other previous one, sell off. So again, we'll start seeing what happens on this one, and I wouldn't be surprised to see another sell off, because what we're seeing on a lot more of these companies is the term kind of go work, go broke. And you're seeing this happen on obviously things like Budweiser. You're starting to see it a bit on things like, well, definitely on Disney, even kind of things like Walmart, and Target is one of those names which people are also saying that same kind of boycotting things against. So again, we'll see how this reacts and if it follows what we're hearing about these other companies. But if we do sell off, what are key supports? So we have 125.75 and 120. They're going to be those two key supports. I think it's 125.75 too close to kind of current price. So unless we open up relatively flat, which we are seeing on a few names recently, we're much more likely to see a move down to kind of 120 would be that key support. And if we had a much more than expected move, 112. Again, from current areas or current price, that would be a 5% move to that first deviation or a 12% move to that second. So either could happen, just depends on those results and potentially that conference and how we react off these. Now to look at the resistances, so 132, we do have our anchor VWAP. This goes from June 1st, so a quarterly anchored VWAP. So if we go and get a small move off the earnings, that could be quite a key resistance. If we start to break that, we do have fair value at 140, but again, we don't really trade off that. So we'll be paying much more attention to the resistances at 146, 148, which again is our anchored VWAP from a year to date. So that goes from January 1st, and also our first deviation from the 6 month at 148. So a key resistance there if we go that side. But again, I think it'll be harder to hit those levels because that does require about 16% move. So off earnings, again, we have been seeing big moves off earnings, but I don't know if we're going to see that sort of move on something like Target. So again, we'll wait and see. I think the main trading opportunities will be the 120 and the 112 if we end up selling off. Probably be something I'll be looking to buy, looking just to buy shares, potentially buy either puts to define that downside risk and just look to play the upside, or just do some covered calls. Again, that will kind of come down to what the option premiums are sitting at, whether it will be better to be buying or selling, because obviously the covered calls will be selling the calls. If we're buying if we're looking to buy the puts to define the downside, obviously that requires buy. So one sell, one buy. Depends on the premiums. If it's expensive, we'll do the covered calls. If they're cheap, we'll be buying the protection. So that's probably what I'm looking at in trading Target if we move to the downside. I hope you guys enjoyed the video. If you did, why don't you check out this video, because you'll probably enjoy that one too.